Hello and welcome back. It's been a week of wild swings for the currency markets. The euro has recouped after marking initial losses and is trading slightly higher at this point. Right now on your screens, holding above 1.42. The Swiss franc is trading choppy after posting a record on-day decline against the euro and the dollar yesterday. Right now, Swiss franc is trading around 73 is when I saw it last. It's holding around 76.89 in the markets there. The dollar index is trading higher ahead of the crucial data in the United States. Right now, dollar index on your screens at 74.5. Asia, though, the rupee saw a gain in sync with the rebound in the euro, but dollar demand from the domestic oil importers is limiting the gains. Right now, rupee on your screens at 45.40, but for the week, the rupee has seen its worst week in last 15 months. Most Asian currencies had a very grim week, with South Korean won falling for a third straight week. Most high-flying emerging market currencies also posted a decline in this week. Let's go across to Abhishek Goenka then. He is CEO, India Forex Advisors, and he joins us in our Mumbai studios. Abhishek, hi, welcome to the show. Let's start with the Indian rupee first, and the declines have just continued, and now we are successfully holding above 45.
Yeah, like Manisha, I think last 15 sessions we have been discussing on the stronger dollar. And I think, we are still in the stronger dollar territory because I think this is the time of crisis, and the crisis is not going to be just like, for a couple of weeks and it's going to go away. And I think people are still not very comfortable putting in money in emerging markets. I mean, the best example to see is the US 10-year yield, which went as low as 2.01%. And despite the fact, the people are actually getting very wary. They are not interested in return on money, but they're interested in return of money, So they're still putting in the money in US bonds, and they are still taking off their monies from the equity markets and the emerging markets as of now. So secondly, the important thing what we mentioned earlier was the best strategy was to actually sell long dated forwards earlier. Now, which has also gone down very much. If you see the premiums for 1 year has come to 1 rupee, 1 rupee 20 paisa like that. I think it's mainly because again, that the US 10-year bond and the Indian bonds differentials have actually come down. That is one reason. Apart from that, we have seen that there was a cash dollar shortage in the market because of oil payments, which has actually moved the rupee weaker, and in the forwards it's come down. I think it's going to continue for some more time. Rupee 46 looks on the card. I would be vouching for a 46, and the premiums I think should again be normalized in case we see a fresh rally in the equity stock markets in India, which might be for 300-400 points. I think the premium should normalize to around 3.5%, which is currently around 2.5% in the near term.
If you are looking at a 46 kind of a level in Indian rupee, that means you're looking at further decline in most of the Asian currencies as well, or how would you want to trade them?
Short term, yes. Asian currencies, I think still should not be bought. I think Singapore dollar and various Malaysian ringgit and all. We have seen some fall, and I think the fall is likely to continue because of the US dollar strength. But at the same time, we would like to mention here that, the US dollar strength per se is only because of huge risk aversion in the market. If I have to take into account what's exactly happening in the US, are we entering into a recession? And I think, yes, we are entering into a recession for US because I think the average quarterly growth would be something around 1.5% maybe for the entire year. The third quarter, fourth quarter is going to be bad. In terms of debt, the figures that we're getting around 12 billion, 14 billion, I think we should focus on 65 trillion dollars of debt what US is supposed to pay for its 350 million people in the coming years, in terms of social security and all that. And lastly, the scenario that the figures that we are seeing in terms of ISM, consumption, unemployment, housing, despite all the QE1, QE2 and QE3 is also looking now in the cards, maybe around $300-400 billion we'll have of the QE3. I think still the money is not sufficient enough to generate employment, consumption in the country or to promote exports, I guess.
If that is the view about the international currencies and the way the Swiss haven, the safe haven currencies, that is the Swiss franc, the way it declined yesterday, where would you want to put your money for a near term or a medium term?
Honestly speaking, Manisha, we have been bearish on these markets, and personally I think a 10-year percentage on your fixed deposits or on Indian government bonds is where the money should go in as of now. There is no asset class in the world which at this point of time is safe. Yes, US dollar, you can say that money has been flowing into US dollar treasuries. At the same time, if you look at the 30-year treasury of US, they had a bust yesterday. There was few subscribers of the 30-year US treasury bonds, and I think money is safe in the fixed deposits in the banks as of now. Even gold as of now with these kind of levels, with 1700, 1800 levels, I think a good correction of $100, $150 is possible in the market. So even gold is something which I would not like to put in my money in. And with regards to Swiss franc and Japanese yen, which has been the favorite in the last 3-4 months, now even those currencies I think have quite been strong now. So I think the risk to return is not justified in these currencies. So I think cash is the king at this point of time, at least for the next 2-3 months.
All right, we'll let you go at that, Abhishek. Thank you so much for joining us with your cues on all of those currencies. So rupee is going to 46 is what India Forex tells us. As far as the other currencies go, well, keep your money out. Fixed income is something that he's looking at this point. With that, it's a wrap on this segment of Currency Call. Thank you for watching.